Hey guys, it's Simon with toughtrader.com and wanted to do a video on the Russell 2000. And so the what of the video, the reason why it is important is because the Russell 2000 offers very responsive areas from key support resistance areas without the interference of algos. Because there's 2,000 stocks in the index and none of them are outweighted versus the Nasdaq 100 or the S&P 500 or even YM, which is the Dow 50. You tend not to have violent reactions from algos that run you to your stops or take out your stops and then go to your location. It tends to behave very mechanically. So the reason for the video is to show traders that if they have key locations, they can take risk with appropriate stops. They can make money trading the Russell 2000. And it's a great place to start if you're a beginning trader because you don't have to, or even if you're an experienced trader, because you don't have to deal with the stress of the algos. So what I'm going to do in this video is I'm going to go through the zones as they were set up through the entire week, and we're going to keep an informal count. I've got my pen and paper handy here as to whether the zone worked or did not work. So to give you some ideas on the Russell 2000, first of all, 1 point from 1507 to 1506, that is worth $50. 1 point is $50. I generally, as a rule, never have more than $200 of risk per contract, and I prefer to keep my risk down to $100 per contract, and I will show you how I do that in executing my trade plan. Two important things to remember here. First of all, past performance is not indicative of future results. I got to get that out of the way. Let me pop this up on the screen real quick so you can read this if you'd like in its entirety. You're more than welcome to it. Actually, I'm going to have to pull it out of here. So let me get it really fast. Sorry for the delay. Let's see. There we go. Okay, so past performance is not indicative of future results, right? You can lose a lot of money trading futures. Make sure you have a trade plan and a risk plan in place, right? This is my trade plan. I share it with you in hopes of making you a better trader, but it's your risk. You have to be able to make the decisions that are appropriate for your goals and your objectives in trading. My objective is purely as a day trader, and what I am trying to do is find the exact location or as close to the exact location where I can grab a turn, and then I am scaling based on the Russell 2000's harmonic rotation, which is 1.9 points. I am then scaling out, starting at 9/10 of a point, right? That is where I'm starting my scale. So $45 a contract is where I'm starting, and I'm generally, once I achieve 2 points, bringing my stop up to the whatever the swing low of that area is. So I'm going to jump right in. So that's the what. The what is Russell 2000 and that it trades very mechanically nicely, right? The so what is it gives traders, and I have many guys that I'm coaching one-on-one finding a lot of success trading the Russell 2000, right? It gives traders a very specific location to look, a high expectation that you will get a counter rotation, and a manageable way to to um, to exit that trade and perhaps catch a trailer as you grow your account, right? And the reason that's actionable, right, is if you know where your location is, you can trade with a calm mind. And then the last piece is the Russell tends to trade completely independent of the Nasdaq and the ES, the S&P 500, and so that is important. That is important because if you don't, I apologize. I got completely distracted. So please forgive me. I'm so sorry. That is important because if you can't trade with a calm mind and have an expectation of a high win rate, um, you'll be frantic mentally, right? So getting away from the ES and the S&P 500 is exactly what some traders need because they don't have to deal with the algos. It trades in a calm fashion. It tends to trade right to location and respond, right? And it gives you a great way to manage both your entries, your exits, and your stops. And it's a great place to start trading futures, right? So let's get started and go into it. We're going to go to 1023. Now remember, I post the charts beforehand and I'll give you a sneak peek. So this is exactly, you can see this is NQ, ES, and the Russell 2000. This is the Russell 2000 with clearly located areas, right? So I want to just cover this real quick. Wide areas, I expect those to high odds of getting a response. Yellow areas, second highest odds. Green areas, is a judgment call based on the trader and based on the price action, right? Sometimes the response, they're the most likely to break, right? So they have the lowest odds of getting a trade, very specific locations. And then blue locations are simply um, look for some type of response in that area, but it is not a layup trade, I guess would be the way to put it. Layup's the wrong word, but it's not. It's nowhere. If the white zone were the highest odds, the blue zone would be the absolute lowest odds of a sense of getting a response. And remember, the idea behind all of this is to get a 1 out of 100, right? 1 out of 100. It's one trade out of a series of 100. It's not one trade and make it all, right? So that's what the focus is of this video. So let's go to the 23rd. You see, we open up the day, and we push. We don't quite push to my scalp location, and it's this area right here was the opening print, and the scalp location was 15, 12, 10, I'm not sure if I intended 10 or 20, but one of the two. I usually adjust it right before the open to get clarification. But this is where I was looking to scalp for a short. If we open up underneath, it didn't materialize. No big deal. Move on to the next trade. The next place I'm looking is right here at 1507. We rotate right down to 1507, and then we get a beautiful rotation from 1507 to 1510. What does that mean to a trader? Well, it's $50 a point. That is a 3-point rotation, 3.5 maximum, but let's just call it 3. So that's a potential of $150 a contract. In terms of what was the stretch from that location, right, and the amount of heat, if you took it at 1507, it pushed you all the way back to about 1506.50. So what is that in P&L and gains or losses, right? So from 1507 to 1506 would have been $50. So you took less than $50 of heat for a $150 potential gain, and I would have started scaling this at 1507.90, right, and then trailed up once I got my 2 points. If I was going to try to get a U-turn and push up into this area, I just simply would have moved my stop to the swing low, which would have been taken out right here. That's on a first touch basis, right? Now remember, this is the least aggressive of an aggressive trade plan, right? We're all day trading, so we're all aggressive. So the what is, let's go back and review, make sure we covered all the bases. Where do I want to trade if I want to have a high odds trade? When the market opened up, I was looking for a scalp out of the 1512 area, never hit. Then I moved over to 1507 to 1506 area. Touched in, I had less than $50 of heat on that trade, and I had a maximum reward of about $170 on that trade if I traded it perfectly, which I'm not trying to do. I'm scaling as we go along, right? Came down for the second touch. There's nothing for me to do on my most conservative of an aggressive trade plan. And the next area I'm looking for is 1503. Now this is a great example of how to manage this trade appropriately. You come into 1503, again, less than 1 point of heat in this location. We rotate from 1503, and I'm going to pull up my tool here so we can see exactly where we went. We went from 1503 to a maximum favorable excursion. The most it went up was 1505.30, roughly 2 points or $100 a contract, right? Now remember, I start with my stop minus $200 and I bring it up right here. So I'm scaling at 9/10 of a tick, probably scaling some more up here as it moves along, and if I have a trailer, I probably got stopped out here. Now, if I was trying to swing out of this location, right, remember my original stop from 1503 would have been 14.99. That still, had we swept straight through here, still wouldn't have gotten hit prior to going up to target. But at this point, by the time it gets down here, I'm already all done with the trade. I got my trade out of this location. I'm very happy. Again, the what? Where do I trade? The so what? That gives me high odds, right? And the now what? I scale as it moves along. I can trade with a calm mind, right? So then I come down to my next location. I'm sitting here at 1501, right? Again, less than 1 point of heat. I rotate all the way back up to 1503, so that's, I took less than $50 per contract in heat, meaning how far the trade went against me, and it moved up to 1503, right? And remember, my day is now done. I never get down to 1496. And remember, I wrote, this was a special exception. I put the notes right in there. Support team for 1490 against a support for this entry is 1490 against 1494.50. So moving right along, this never got hit. Roll on to the next day. So that was the 23rd. We come in the 24th, right? Now notice, I am looking for areas to trade. The white area is where I'm attempting to trade, and most likely I shorted this 1681. I probably front ran this by a tick. I would consider this the first touch. If you had it right at 6081.70, you got 6081.60, 6081.70, you probably got hit. If you had it at 6081.80, you did not. Either way, this gets tested, rejects out. That's right out of the open. Special caveat note. You don't have to trade the first half hour. It's the time where it's the most volatile. You can skip it, but I do trade the first half hour. That's it. So you make a simple binary decision. I can accept the risk of trading the first half hour, or I cannot. Right? My risk again would have been $200 on this particular location. Rotation all the way, all the way, all the way down. This is a yellow location right here, right at 60.80.16. Again, we tag in. You would have taken less than, 60.60.16. On this particular trade, right, the market's looking pretty ugly there in the morning. It pushed you back to 60.57. So remember, if I took it at 60.60, right, 60.60, my stop is 4 points, would have been 60.56, right, which would have been right about here. That would have been my stop on this trade. So you did take a little bit of heat on this particular trade. Now, you'll notice you then rebound, and the first rebound push up, you get a maximum push up to 60.69. That's a this is a pretty volatile environment right here, right? That's 60.69 from 60.60. So what you ended up doing is taking 3 points of heat, or $150 a contract. Again, I start off with a $200 stop, and this was obviously open drive lower. You had to be pretty brave to buy this. Quite frankly, it would have been hard for most people just to take this as it's going straight down, and that's fine. Nothing's wrong with that. You could have easily passed and lived to have a fantastic week, but if you did, you took $150 in heat per contract on initial entry, right? And then it ran you all the way up to 69. From 60 to 69 is $50. Let's see, that's 9 times 50, $400 a contract. And that one rotation, you take out your trailers, you put your stop right below your swing low, and then you obviously had the potential for a massive day. Now this is important. 60.88 to the tick, right? 60.88.60 essentially was my next location. Notice this already got tested, so I'm not shorting over here. This is my next white location, right? You can see the whole zone's marked as a massive white zone, front and back. And then focus on this zone. You'll notice I also wrote is as close to that VPOC as possible. We never got up there. First touch into the white zone, right? So you'll notice when the zone is big, I'm generally working the front and the back for two separate trades. First touch of the white zone, almost no heat. Rotation down. This video is going to go way long if I count each of these, so if you'd like a copy of the charts, email me and I'm happy to send you the before and after pictures. But almost no heat in a roll from 60.88 down to 60.79, $50 a point potential again, and I'm starting to scale at 9/10 of a point. $45 a contract is where I'm starting to scale, right? That's part of my formula, right? So I'm not trying to read the whole market. I'm not trying to hit home runs. I'm trying to get good trade location is all I'm trying to do, and that's exactly what this provided for me. So then we roll into the 25th, 24th, 23rd, that's right, 25th. This is the 25th, and you can see we open up. Now, purple and blue and all this, there's no location. My first location was the scalp location at 1494, right? It's labeled scalp location, and if we look at that really carefully, right, I would have entered 1494. I would have taken heat, 1494.20. I would have taken heat back to about, let's call it 1493.20. Let's call it 1 point, $50 a contract, and my maximum favorable move would have been 1495.50. Enough to get my 9/10 of a scale, move my stop behind my swing low, and I would have gotten stopped. And with the way that I scale, all else being equal, I probably would have taken a small loss at this location, unless my plan was to scale all out at 1 point because we were open drive lower. And I don't want to make the video too long, so I'm going to assume that I lost some money at this location because it would be unlikely that I would have brought my stop to break even. And that's one of the things you can tell when someone's legitimate or not, right? You're going to follow that process. Odds are I got stopped out on this trade, and I believe I did. Next location, right? This whole white zone from 1492 to 1490, the whole area is valid. I would have taken it from the front of the zone, and odds are I never got odds are I never got my, let's see how much rotation we got, 1492.60. From 1492, now the way I actually manage this, odds are, and we were in a free fall, right? So again, I put out the zones and then I riff a little bit off of what's actually going on in the rim. So I probably loaded up in two areas in here because I consider the front and the back a valid trade. So I probably had some at 1492 and added back at 1490. I don't remember. I'm pretty positive I got out of this trade completely profitable. You got to remember ES and NQ were falling apart at this point. So, but the question comes: did the zone work? The zone did stop. It did give you location, and it actually, if you'll look here from the top, I stand corrected because from the top, if you came in at 1492, the very next bar pushed you to 1493.20. So you did get your initial scale from here, your 1493. If you moved your stop to, now I remember, you entered 1492, it then pushed back to 1493. You got your first scale, you moved your stop to net to the swing low, and you were nicked. Most likely is what happened is you got stopped out on this trade when it came down and pushed down, and then you re-entered at the back of the zone, and that gave you a nice trade back to the upside. Guys in the room, I am publishing this, so if I got that wrong in the sequence in the room, but I'm pretty sure everyone did okay at this particular level, unless you double dipped on this zone on the backside test trying to catch the U-turn, and then you definitely got stopped. So again, the plan I'm presenting here is the most conservative of an aggressive selection of trade plans, right? So then lastly, my location was 1482.90. First tag into 1482.90 gave you a huge counter rotation. You obviously never came back, and that was the end for the day. You'll notice that I can tell you in ES, we were no longer shorting. This is a massive stretch, and the only option here was long for the day. So there's really nothing else to discuss. Oh, interestingly enough, the following day you see we come into the scalp location at 1502 and rejected right out of it. So that takes you to the 25th. Let's do the 26th really quick. So here's the 26th. I did not set that up, but here we go. And I probably changed the chart a little bit. So let's see how we opened here. Okay, so I modified the chart slightly, and you can see on the open, we pushed right up into 1501.30, right? That was my trade location. I do not recall if I got filled or not, so I can't claim it one way or the other, but I can tell you I would have been pretty aggressive on both of these locations, and you can see we just ping-ponged between both these points. You pretty much made money at either point in terms of scale and exit. Again, it's the first 5 minutes of the day. Unless you're uber aggressive, there's no reason to be trading there. After this gets done, right, my next location is either going to be this white zone back over here, because remember, this got tested the first time through. This has been tested the first time through in the first 5 minutes. So some days that happens, no big deal. So where you're pushing out to is 1504, doesn't get there, or you're pushing down to 1494.50, and you'll see we missed this just by a tick. And I will tell you, because I remember this day very clearly, I was loaded up and ready to go at 1494.50, and I actually have a very clear memory. This is 1494.60. If I remember correctly, 4 contracts went off. There was no way to get filled on this unless you front run it. Shrug of the shoulders. That happens sometimes. I'd rather have good location and miss than not, right? So this day was pretty much ended up being a wash. And interestingly enough, you'll see the following day, the 27th, we pushed right into 94.50, 93.50. It came very close to getting tested. My guess is I lifted this zone, and so this bar is what I was looking for over here, and it just missed. No big deal. I had the right location. Totally happy with it. Let's move on to Friday. All right. So Friday, again, the idea being I have great location. The white zone, this was tricky. I can tell you I did not, with the way the NQ NASDAQ 100 was gapping, even though there's no direct correlation, ES and NQ looked very strong overnight. I was very hesitant to short anything on Friday. There was no short. This is a green zone. Green zone's the lowest odds. But with the strength in the market, it ended up holding. You can see that white zone would have still been a valid location for a viable short. I didn't take it. And then you can see I said once we gotten above and the second time we closed above, this was a volume point of control. Once we gotten above it, the clear and present target was 1505 to 1508, and that's where we spent all day. I did not short on Friday, so there was nothing for me to do. I wasn't going to short in that environment. So recap the video. The what is the Russell 2000 providing good location where you have high odds of getting a profitable trade following both an entry and an exit and a risk management plan. I think just in going over the last week, I can prove that that is highly effective. It trades independently of NQ and ES, which is nice, especially if you get tired of getting run around the algos. There's almost no algo activity in the Russell 2000, right? And lastly, it trades very nice from an auction process. It goes from point to point. So if you would like an edge, if you'd like to come visit us, you're more than welcome to do so. If you'll email me at tradeandperform, TRADEN perform, PERFORM @gmail.com. Anyone's welcome to have a 5-day trial. Please email me, send me your Twitter name, and then I will hook you up and get you set up on our private Twitter feed. And additionally, I am going to open the room tomorrow morning to anyone who'd like to join to see how we trade in the morning for the first half hour, and then I will close it down for members only after the open. So at any rate, that's my 2 cents. I'll see everyone at 8 a.m. I will publish the link so that anyone who would like to come in, I will be publishing that link at 7:50 a.m. tomorrow morning. I want to make sure the members get in the room first, then everyone else can join. Okay, have a great day, guys. It'll be open to the public for Monday morning, and I'm looking forward to making money tomorrow, and I hope everyone here has a great week. See y'all later.